Hello, internet coin enthusiasts. Today I'm speaking with Jackson Zeng. He's the CEO of Caleb and Brown, which is a crypto brokerage firm here in Melbourne. Jackson is one of the most knowledgeable people on macro and Bitcoin in Australia. So it was a real pleasure to sit down and discuss Australia's kind of unique economic predicament right now. We did make the joke in the show that this kind of turned into a housing special, but I think it was a really, really good read on how Bitcoin and cryptocurrency fits into the very weird economic kind of mash that we have going on, where we have a massive displacement of assets in some areas and then just completely different worlds happening elsewhere in markets. So Jackson and I really went through bullshit Australian economic data, the reasons behind the growing whom Ponzi affordability crisis, whatever you want to call it, as well as getting Jackson's read on where Bitcoin and the rest of the cryptocurrency market is headed in 2025. So, ladies and gentlemen, without any further ado, Jackson Zeng. Thanks so much for coming on the show, man.
Thanks for having me. I'm excited.
You put out a tweet, was it yesterday or today?
I put it out just for this, so
okay.
It was a few hours ago.
There we go. Prime time. Yeah, you put out a tweet essentially looking at real versus debasement returns. I'm going to bring it up. I wish I had a Jamie to say, bring that shit up, Jamie, but unfortunately, it's just me. Can we run a little bit through real versus debasement adjusted returns? What do you mean by that?
Yeah, so I've been going on about this for a while now, and I don't feel like the market has fully grasped it. There are a few people talking about it in the US, but no one really applies it to the Australian landscape. So in economics or in finance, anywhere in the traditional finance field or anything you hear about from politicians, you always hear the word real, maybe real GDP or real returns. They've given that label for a reason. It's because someone's pointed out that inflation's a thing, so your nominal returns, and for anyone that doesn't know, nominal is just the base reported number, right? So $100,000 today and $100,000 tomorrow, adjusted for inflation, will give you your real number. So, for example, your $104,000 is in real terms $100,000 last year if inflation was at 4%. Now, I have a massive problem with using the word real because real has a meaning in the English language. That it's like you automatically assume as a layperson or as anyone with common sense, you assume that it means this is a reasonable reflection of what your real life is gonna feel like. Mm-hmm. And so I'm pointing out a chart here, which is like if we rely on the CPI numbers and the economists or the politicians or the news anchor says inflation's at 2% or inflation's at 4%, the ordinary person would assume that life is going to feel 2 or 4% more expensive. But we just know that that's not the case. And that tends to not be the case every single year over year over year over year. So if you actually look at it from first principles, and say, okay, what are we actually trying to solve for when we're adjusting the nominal figure? We're trying to adjust for the net effect after governments and central banks have injected, their manipulation on it. My view is the closest way to look at that is by adjusting for the money supply growth. So let's say today we have $100 trillion in the economy. A year later, we're going to have $110 trillion in the economy. Because if you average out the 30-year money supply growth, in Australia, we're actually printing 9% more dollars every single year. And I bet that's a surprise to everyone.
Yes, it is. Why is that the case?
This is kind of it's a long chain of events, right? So money used to be gold, then we printed paper receipts for gold, then bankers realized they can issue out more paper and people wouldn't realize, right? So then they started running out of gold and okay, I'm sure all of your listeners understand WTF happened in 1971. The US ran out of gold in 1971, so we're on the fiat standard. But that actually now means all the other central banks around the world, instead of holding gold, they're now holding US dollars, who then hold, nothing.
Yeah.
And so the power the US has is they can debase their own currency, which gives them additional purchasing power because they print the money and give it to themselves, which debases the asset that everyone else holds, which is US dollar denominated debt. I can already feel people starting to slip away.
No, it's good. It's good.
Let's try and simplify it. What I'm trying to get at is money isn't real. Money is the measuring stick. And what economists are doing is saying, every single year, I'm going to change what a centimeter is. And so they're stretching out the ruler every single year. And so they keep referring to it as 1 centimeter. But every single year, the thing it's measuring is getting diluted. So what's actually real is if you adjust for the amount they're stretching out the ruler, that's your actual debasement rate. And so in Australia, we're printing out 9% more currency every single year. In the US, they're printing about 7% every year. Most countries have to print more than the US because the thing the central bank holds in that other country is US dollars. So if you're debasing, I have to debase faster than you. Otherwise, I'm the net loser.
It's that old quote of I think it was Secretary of State in the late 70s. I've forgotten his name, but he said, it's our currency, but it's your problem. When referring to the US dollar, in international politics, it's like, sorry, that's how it is.
That's an incredible quote, and it's a good flex. And it actually shows that's the dynamic. That's the dynamic that holding the reserve currency, that's the power it gives you.
Yeah. How does the debasement side of things link into inflation at the moment? Because I know Australia has some of the worst entrenched inflation in the OECD. Explain it. I'm essentially a Neanderthal at this point when it comes to a lot of this stuff. So explain the relationship between debasement and inflation.
So inflation in Australia is actually really interesting. It is way worse for us on the housing side than the consumables. Now, this is another reason I have a problem with the word real. It's not measuring. It's not measuring our lifestyles against the things we actually want. Right. The Australian dream is you want to own your own home, and so, I believe, or my opinion is that inflation should account for home ownership. Now, the way they measure it is they measure rent. Okay, fair enough. They also measure housing, or the price of a house. But the way they do it is they don't measure established houses. What they measure is the cost to build a new house, excluding the land value. Now, in Australia, the land value is 60 to 80% of the cost of the house.
That's the whole point of buying.
Yeah.
Okay.
Correct. So in the post-COVID, highest inflation parts of history, Australia is reporting 2.6% inflation. It's just absolutely not true. So in reality, if we actually look at what's going on, this chart shows some nominal figures. Nominally, your cash obviously stays flat. That's 0. Your wages every year on average grows at 3%. Houses go up by 6.8% per year. So every single year, you're actually getting about 4% further away. Your wages are growing less than the house price. And then stocks plus the dividends will give you about 10%. But if you adjust away the, I'll call it real instead of real.
Real. Of course.
If you adjust that away, then there's actually no growth in Australia. Australia for the last 30 years has had about 8% growth in its equities, and that's including the dividends. And nowhere else is there any growth. And that's because we've been on this ridiculous housing Ponzi where you are just exit liquidity for someone else's.
I borrowed it. I saw it on Twitter somewhere, but it boomer NFTs, essentially. Everyone knows it's ridiculous, but the Australian government backs it. So you can sweep the floor anytime and it's safe. You can just keep shuffling them in and it's fine. How do you see a way out of it for the government in terms of like no minister is going to come on television in Australia and say, we want to bring home prices down, because I think that that would just make you lose an election faster than anything. What's a non-politically motivated way this could be adjusted?
So this is funny. I've had this conversation with a lot of people when I point this out. The natural instinct for everyone in this conversation is like the next question they ask is like, okay, so what's the solution? And then I throw my hands up and I'm like, I actually don't know the solution. Yeah. I don't know the solution. You know,
Yep.
Australia has a problem known as Dutch disease. In Dutch diseases, your country is really, really rich in natural resources. For them, it was oil. And because they're really rich in natural resources, they can basically become complacent and their labor is like not as competitive as at other countries. And so you just become dependent on that natural resource. That's essentially what's happened in Australia. It's also it's a beautiful country. It's a great place to live. Everyone wants to move here. China's getting really, really rich. There's 1 billion people there. 1% of China is like half our population. Australia is like the first or second immigration destination. So there isn't really a solution here. The solution here is to like manage, manage the outcome. Like like we're not competitive, right? So ideally we'd have a better performing stock market and more innovative companies, but that's very hard to do. And politicians can't just magic that.
Hey everyone, be more innovative and produce more stuff. Thanks. Yeah. No, looking at the ASX over, I think I made a joke at some point in like the before ETH. Oh no, this probably is still apt, but it was like if you'd bought the ASX anytime in like the last 5 years, you'd probably still outperformed ETH, which is not good. But the ASX 200, that's you compare it to the S&P 500, and it's ridiculous. You just think like what like financially productive industry do we have here? I think it's 22% over the last 5 years. So if you bought the top 200 companies in Australia, you'd be sitting on a 22% net gain over 5 years. So 4 and a bit percent a year.
Yeah, that's correct.
Yeah,
correct. And that's true of a lot of economies. It's not just Australia. So we live in a world where it's basically winner takes all for almost anything, right? And especially liquidity. The same way Binance gets all the liquidity in crypto, New York gets all the liquidity in the equity market. You know, there's I think a Naval, I think it's a Naval quote. It's the person who's the best in the world at something gets to do that thing for everybody, because we're in such a like globalized, connected world now. So that applies absolutely in the equity market as well. Companies in the US, there's more investment. Because there's more investment, they get to trade at higher multiples. Because they trade at higher multiples, founders want to go there.
Yep.
And then you just get that feedback loop, right?
Well, this is the thing. It's like no matter what industry you're in, with the internet, it sounds almost dumb to say, but it's like the internet kind of radicalized almost every industry in the sense that you can now be number one for everyone, everywhere, in anything, like in any kind of service that could be delivered digitally. And that includes the arts in particular as well. Finance, the whole shebang. Moving back to like Australian landscape for stuff, what is crypto looking like in Australia right now from your end? What's the institutional side looking like, and then how's retail doing? I guess we'll get a health check on the everyday the everyday man.
So this is really, really interesting. On the institutional side, we saw that globally in the crypto market, the institutions are big movers this year or last 12 months. Massive uptake in the ETFs in the US. Now that has actually not taken place in Australia. There have been a handful of ETFs that have launched. I think Van Eck is sitting on like about 200 million. Monochrome has an ETF with under 50 million under management. Like cumulatively, that buys you like 2 houses in Sydney. So we haven't seen the inflow. And the reason for that is because Australia, again, it goes back to the housing thing. I'll try to move off it, but like,
No,
Australians
we
have no
can
money.
stay here all day. I'm more than happy. This is the housing podcast now. Yeah.
Yeah, essentially, Australians have um, no money for the equities market because all of their wealth is tied up in their mortgage. So the equity investment done by Australians is actually all in their superannuation. It's like, you make your income, 11% of that goes to the super funds, someone else is managing it. And those guys are slow movers. They're in charge of everyone's money, so they got to, take their time with diligence. Eventually, we will have someone deploy superannuation money into Australia, or sorry, in Australia into crypto. Probably going to go into one of the Bitcoin ETFs. That'll be an exciting day for us. There's some movement. AMP has done something in the space recently, so there is some movement. We haven't seen it yet, but I'd say Australia is not a big. Australia doesn't move the needle on the equity side. That's on the institutional end. Retail is a bit more interesting. We're heading into an election in the next few months. Typically, Australians are not as election energetic as Americans are.
A nice way to put it. Yeah.
Yeah. But I just saw this survey from YouGov that just got put out. It's super interesting. So we have about 20% adoption of crypto in Australia. There's 4 million Australians that own crypto across the retail platforms. Of those, most of them are millennials. It's probably because they're locked out of the housing market, also just a more digitally savvy population.
Yep.
But in this survey, 59% of them considered a pro-crypto candidate to be an election issue. Which, if you do the maths, that's potentially 2 million Australian voters. That's almost 10% of our population. So I think it could be a big topic in Canberra. I think we could, follow the US in a small way. So I'm quite excited for that.
Yeah. Okay, that's really interesting because I met up with the Stand with Crypto guys at here in Melbourne when they launched. I covered an event that they attended as well, and there's a couple of Liberal MPs that are very much pushing the pro crypto policy side of things that aren't just Andrew Bragg. He's the only guy in Parliament that said anything about crypto, I think, ever. Especially on the Australian side. But that would be really interesting if we see a breakthrough in mainstream political narrative to do with crypto this time around. Because I feel like in Australia, it's just one of those fringe things where it's a lot of people own it, but I feel like it's treated. Australia is a country of gamblers. The people I know that are quote unquote normies, not working in crypto every day, they are essentially buying older altcoins, and it's not exactly what you would call an investment strategy. It's more like, hey bro, I just chucked 20 grand into XRP because I watched a YouTube video. Check it out. And I feel like that's a lot of the actual retail class. It's almost adjacent to gambling, but Bitcoin ETFs was kind of the nail in the coffin of oh, it's a scam, isn't it? It's no, Larry Fink's fucking buying it. Come on. With the Australian landscape, are there any trends that you've noticed, institutional retail side, that you think are particularly interesting, apart from super potentially coming in? Tacking onto that question, what would your timeline be for some movement from a super fund being all right, we'll chuck 1% in to Bitcoin, or probably a smaller amount, to be honest?
I think it's going to play out something like the US. We have currently a proposal for a crypto regulatory framework in Canberra. And the draft is not going to be completed before the election, which means we don't know what the rules are going to look like, whether Australia wants to be an innovation forward landscape or not. My hope is that our 4 million Australian crypto holders make this a bit of an election issue. And so post-election, when we get a signal and we get a direction from the winning party, that's when I think everything will happen at like, breakneck speed. It's kind of like, Trump comes in and then like 3 years happens in 2 weeks.
I will be very shocked. Like, not shocked, but like my own personal opinion is that I will be quite surprised if there is like Australian retail interest in pushing crypto as a political issue. I kind of hope that there is from a more sensible point of view, but I worry in the same way that it happened in the US that it will become one of those like topical, very partisan kind of issues of like, oh no, the liberals want crypto to be a thing, and then Labor, Greens. But it'll be interesting because it's like, you do have a split of young people being the ones that invest in crypto, and so it could be one of those slightly more bipartisan things as well.
Yeah, it's a funny one, right? Because you'd think Labor's going to be okay. We're pro protection. Makes sense to be anti crypto.
Yeah.
But the Labor voters are all young people, and so I'm willing to bet there are far more Labor voting crypto owners or holders than there are Liberal.
True.
I also don't think that, I'm not sure the government's aware of that. So
Yeah.
yeah, it will be interesting to see how this plays out. It's not going to be as, like rambunctious as
Yeah.
the US.
Yeah.
But I think people will be listening, and if they see a small like, hey, I'm supportive of innovation, I'm supportive of digital assets, they might tick a box at the voting booth, but it's we're not picking.
Yeah, exactly. It's like it might move the needle a little bit in favor of one side or the other. You're not going to have Dutton or Albo coming up battling it out over a Bitcoin reserve. That would be the height of Australian politics, is Albo arguing against a Bitcoin reserve. Speaking of a Bitcoin reserve, you're running a pretty interesting financial experiment at the moment. You're buying Bitcoin every day until there's a Bitcoin reserve. Are you still doing that?
I am still doing that. I'm on day 83 today. It's actually very difficult to remember what day
Yeah.
I'm on. It's all become a blur. Yeah, I'm buying Bitcoin every day. I guess the project is I'm going to do it every single day until the US establishes a Bitcoin reserve. I have a reasonable conviction, it's not 100%, that it's a matter of time that in some form or another there will be government ownership of it. Now, the reason I decided to do that every day was for a couple of reasons. One is I wanted to like live in the like you can just do stuff mindset. And like in the attention economy, like I see people having a much wider like breadth of conversations with that you can engage with way more people in the world when you can signal to the world in as quickly as possible like who you are, right?
Yep.
So that's kind of what I'm trying to do. I'm trying to like, you can just do stuff, play long-term games with long-term people, show people that like, hey, I just buy Bitcoin, I save in Bitcoin. I'm not actually doing anything new. I've obviously owned Bitcoin. I have owned Bitcoin. I have been buying Bitcoin for a really long time. But yeah, like the way the other thing I'm trying to encourage is for people to actually think in a saving mindset. Currently, we're in this adoption curve for Bitcoin, which means you can actually speculate and you will gain a lot more if you're early in the adoption curve. But at maturity, Bitcoin is supposed to be digital gold. It's supposed to be a saving tool, right? So when the whole world's adopted Bitcoin, it's not going to give you these ridiculous returns. What I'm trying to show people is like, look, this is the purpose. Like we're buying Bitcoin not just because it goes up in a straight line every once in a while, but because it is a far better saving tool, right? I'm in my late 20s, and that means I'm just at the very beginning of my 50-year career, and I need to earn as much as I can, spend as little as I can so that I'm saving, and then with those savings, invest well. Now, that's not saying everyone should copy me and put like everything into Bitcoin. That's and I've actually diversified, and I
Yeah,
do own other assets. I have just decided that I've got
you
enough.
heard it here, everyone. Full Bitcoin. Not financial advice. I will put a disclaimer somewhere.
The financial advice is like earn as much as you can and spend as little as you can, and then invest that well.
Exactly.
But yeah, it's like it's something that the crypto crowd is actually not known um, to promote as much. I think we should be talking more about saving, uh,
Mm,
more about like what real saving actually looks like. The way I think about things is like you go through life in 90 years. Your first 20 years, you don't have to worry about money because someone's taking care of you. Then from 20 to 70, that's your career. So you've got 50 years to earn money. And then you're going to live from 70 to 90.
mm,
Um, so you have 50 years to earn money and 70 years to spend it. And so, and I always try to think in these like first principles ways because I don't believe in the nominal dollar. I know that rule is being stretched.
yeah.
So I try to abstract everything away. So the way I think is like, okay, well, um, if I need 20 years of spending at age 70, which is when I retire, I need to earn 1.4 units of spending every year and only spend 1 unit of it, right? So I'm saving zero point 0.4 units every year. So that's what I'm doing. I think of that not in dollars. So I'm trying to build up that saving base in Bitcoin at the moment.
Okay. Yeah. Wow. That's a very like COO answer to to the question. But it is fantastic. I do want to ask you, what gives you this conviction in Bitcoin? Because it's something that I feel like crypto natives understand, whether or not they just be. I think what you've said about saving is a very, very important thing. I do not think that you hear the word saving in crypto at all. It's treated like hyper risk. Go there, gamble, go to the casino, throw as much as you can on shitters and hope that you walk out with something. And for a long period of time, Bitcoin was seen as that. But now Bitcoin's become this like actual, I mean, at least in my eyes anyway, it's become this asset that people are now like, oh, well, I'll just gamble in the casino and then I'll stack it all in Bitcoin when I'm done. Like that's almost the playbook of every like Intuit degen that I know. What made you look at Bitcoin and think, I want to save my money in this long term? Because I feel like that's not something that comes naturally to most people who look at Bitcoin. They're in and they're out. It goes up and it goes down. And they're like, fuck it, they would not feel safe holding their money in that.
I'm going to take you on a little bit of a journey through like
Please do.
my education. So I, I've ended up in financial services, but that's not that's not what I studied initially. I was studying architecture at Melbourne University because growing up in a Asian household, like being at Melbourne University is like a very important thing for some reason. And so like, growing up,
Yeah.
I listened to my parents like, yep, you want to go to a good university, you want to get a good degree. And they're like, yeah, architecture at Melbourne University, that sounds great. And so I listened to my parents, I went and did that. Now, in one of those, in that course, I did a breadth subject, Introduction to Macroeconomics. And I learned about just basic things, discounted cash flows. I learned about time value of money, which is just inflation. And so then I just started learning basic finance. I looked at, okay, so how much do to architects earn after graduation? And then over the course of their career, like how much do they earn at the peak of their career? So I did that, I modeled all that, and I'm like, oh my God, like my parents are not, they give terrible advice.
Yeah,
I
do the
looked at my
quick
dad, I'm
maths.
like, I
Oh,
should not have
fuck.
listened to you. What have you done? So, I realized, and I actually realized like I was really interested in economics. But I also realized I was in the wrong degree. Um,
Yeah.
so then I, did a lot of self-education, read a lot of books from Howard Marks, Ray Dalio, Warren Buffett. So I don't call myself self-taught because I don't think anyone's like, I think I like self-picked the curriculum,
Hmm.
but I'm not self-taught because I'm taught by the people who wrote those books. And that's something I really like about like our generation is, like I said, the person who's best in the world at that thing gets to do that thing for everyone. Well, because I picked my own curriculum, I said, well, stuff these teachers, what do they know about making money? They just learn from like the people who are the best in the world at it. And so, one important thing that I learned from Ray Dalio is the big debt cycle. There's short-term debt cycles, which are like 10 years. Then there's like 100-year debt cycles that people don't really become familiar with because there's only one per lifetime. So it's always a surprise. But if you go through history, essentially every government debases the hell out of their currency because they run out of money to spend. Yep. So the current world order, Ray Dalio calls it, is the US world order. That's established at the end of World War II, 1945. Everyone holds US dollars. They had, I think it was 70 or 80% of the gold at the end of World War II. So they actually had all the money. And so they got to print the currency. Then they ran out, they spent it all hilariously in like 30 years, which just goes to show that pattern always repeats if they manage to spend it that quickly. So then the question is like, okay, well, that debt cycle is probably not going to end this year or next year or next year. But I'm only 20 years old. If I look out until I'm 90, what's the probability that it occurs in one of the years?
It's coming.
that I need to prepare for my retirement for. So Bitcoin just kind of made sense to me from a digital gold perspective. So there's that. So I think in a really, really long-term time frame.
I know everything you've mentioned, you've brought it back to like 70, 90 year, like, my lifespan. I'm like, holy shit, dude. I don't think about next week. This is impressive.
Yeah. So yeah, that's like, I think more people need to think about that. I think more people need to think in, first principles. First principles is also something that, I'd say learn from like Peter Thiel. There's another fascinating story I went through. This is I went all in once, which is with my career. I said, okay, I'm going to go into the crypto industry. Then I'd been, responsibly investing that whole way. And then there was a second time where I went really all in, which is like all the stuff, all the money I'd saved up from my career, I put it all into Bitcoin again. That was in March 2020.
Good time to do it.
Something occurred. Like we remember market dipped heavily. Then it recovered sharply because in the sell-off, everything gets sold off. But there was like a moment in time where I felt like the market was wrong. And I checked from first principles, right? Okay, if the currency supply is going to get inflated, that's probably going to be good for Bitcoin, which means the price should be up, but the price was down, right? So I felt like, okay, I have an information advantage. Let's try and make use of this. What actually occurred was in I think it was like 16th of March, 2020, the Federal Reserve dropped the fractional reserve rate for banks. Have you ever thought about this question actually? Like fractional reserve banking, I'm sure you've heard of that.
Yep.
What's the fraction? Like what fraction is it? There used to be a fraction. There is a fraction. The fraction is 11% or 10% in some countries. So 1 over 10.
Okay.
Which means for every physical piece of paper banknote that the Federal Reserve prints, they give it to the bank, right? The bank issues out loans, and over time, it circulates into the economy. It goes to another bank and then another bank and goes back and forth. But over time, a bank is allowed to have in circulation 10 times the number of banknotes they have. Let's say I'm the only customer at a bank and I've got $100,000 at the bank. The bank has $10,000 of banknotes, right? It doesn't really work that way with one customer. But in March, they said the Federal Reserve made an announcement in order to support the economy or in order to rescue the world, we are temporarily dropping the fractional reserve ratio from about 10% to 0%.
Loans. Everyone gets a loan. Like, you want money? Congratulations. Here you go. Yep.
Exactly. So if you just like understood how stuff works underneath and in the background, you don't have to wait for the news. Because the news is saying, oh, the price went up because of this. They're explaining stuff.
It's always, mate, I worked in news. It's always backward looking. It's always a backward looking indicator of, like, whatever you read a headline, it's like, oh, it happened because of this. And it's like, that's not causally correct, but okay, sure.
So that was like, yeah, I would call that the second time I went all in, like super high conviction, went all in, because yeah, it was just like, it was all the lights blinking green and then the market responding red.
Well, I remember at that time, I think like Nassim Taleb, I think, funnily enough, put out the Bitcoin black paper around about that time. It might have been a little bit later. It could have been like late 2020, early 2021-ish. But he put out and he was using the reason that you used to buy for his reason to essentially grave dance on it. And again, I'm not shitting on Nassim Taleb. He knows more than I do. But it was essentially that thing of like, well, inflation's up and Bitcoin's down. Isn't this supposed to be an inflation hedge? And kind of was like, that's it.
Yeah, I guess his interpretation of that was the market was rational.
Yeah, okay. And you're like, the market's wrong.
I'm like, no, it's wrong.
I don't think I've ever said the market's wrong and then I've been right. So, you've got an advantage there.
One last quick thing that it's worth remembering. When it comes to the issuance of money, or when it comes to anything like where there is money to gain or supply expands because of it, and the government says, we're doing this thing temporarily, it's probably not temporary.
Yep.
So that reserve ratio, that's at 0%, it's still at 0%. Because if you think about it, right, like banks are trying to make as much money as possible. So they're always maxing out the risk limits, right? It is their CEO's fiduciary duty to the shareholders to always max the hell out of it.
Maximize shareholder value. Yeah.
Exactly. So when you drop the reserve ratio down to 0%, now it doesn't actually mean infinite currency issuance. It means other controls apply, but it's something that you cannot put back in place. I guarantee you, if they said we go back to 10%, all the banks implode immediately.
True. You have to call in loans like, okay, guys, shit, how much do we need on hand? You mentioned that was the second time that you've gone all in. When was the first time that you went all in?
Oh, that's right. Yeah. So the first time was it was a lot less intelligent. It was me understanding that my career in architecture, if I had forecasted out my earnings, was in Australia not great, and certainty of not great.
Definitely average, like definitely not fantastic. Yeah.
So I had made my I'd made a decision to go all in into crypto as a career. Back then there were two companies that I could find in that like crypto companies that were hiring. One of them was Apollo Capital. I interviewed there, and someone smarter than me got the job. And then I found Caleb and Brown from the other two co-founders, and ended up joining them as the first employee.
As the first. Okay, well, you've done well for yourself. What was that like, going from architecture into like going into a crypto brokerage? What just being like, fuck it, I'm bailing. I'm out. I
don't think it's too crazy. I was a student at the end of the day. I was one semester from graduation. So it upset some family members.
I was about to say, your parents would be like, this is not the right call.
But I don't think it's anything too unique, because crypto wasn't like, it went from not being an industry to being an industry. So then everyone who was new in it was, more or less came from something else. I'd say that like I probably put a bit more emphasis on communicating things visually than others in the space. I find others to like be a lot more black and white, lots of numbers in finance. I try to stick colors and charts.
Yeah, it works. It works. I'm like, ooh, colors. Let's go. I can understand this. This is good. You're one of the most like moderate people I know that buys shitloads of Bitcoin all the time. because this is something like my onboarding experience into crypto was friends that were very much enamored with it. Were trying to drag me to blockchain meetups, and I was like, I was in a different mindset at that point in time. They were working finance side jobs at like crypto startups in Sydney. But when I first got into crypto, I remember seeing like very much like the laser-eyed Bitcoin maxis, and it was like, have fun staying poor. You've got to buy Bitcoin. Fiat's going to zero. And like that actually put me off for quite a while. Like I feel like if I'd met you earlier or someone that was a bit more like, hey, listen, I'll explain it in first principles as to why this might be an okay idea. But for the longest time, I just got like, dude, you're going to be broke if you don't buy Bitcoin. I was like, that's not a good argument. Whatever you guys have, I want no part in it. But I eventually came around. Like it was very much like a full 180 where I'm now like, oh yeah, it's a pristine asset. Let's go. Speaking of Bitcoin, we have ranged at what, 97-ish, just under 100K for the last month. I think a lot of people are, I would say that people that invested in altcoins are more worried than others. But in the part of the market where I circulate, everyone's kind of shit scared that like BTC goes down a lot from here. If we get another crunch, you can say goodbye to a lot of already pretty sad looking altcoin gains after the sell-off in November. So how do you see market structure for BTC shaping up right now?
There's just two markets. There's like two entirely separate markets. There's different people playing in them, and everyone's surprised because they got so used to there being that single crowd, right? That single crowd that we initially talked about of like young tech-forward millennials. Well, guess what? There's a bunch of 50-year-old business owners and institutions and people that have parked their money with BlackRock that hold the Bitcoin now, and they're just not looking at like what's the next fart coin.
Don't tell fart coin guys that.
So there's two markets right now. Like, we've seen Bitcoin historically perform in these 4-year cycles. There's probably two big contributing factors plus some smaller ones. The big factor is the 4-year halving. The second factor is actually macro liquidity cycles also happen in about 4 years. So when global liquidity is up, Bitcoin actually is just correlating with it. So it's I don't know if that was like designed by Satoshi or it's just a happy coincidence, but it has done wonders for Bitcoin. Now the problem here is we're at about 20% adoption in Western countries. So all the millennials are in. The millennials got in last cycle. So the next cycle is, all right, Gen X baby boomers. They have seen the 2000s tech bubble. So they know nonsense when they see it. To give you an anecdote, like when we launched Trump coin, there was crazy demand for it everywhere.
Yeah.
Our customers also asked for it. Right, there was actually a lot of demand for it. But then I looked at the trading sizes. It was very high demand, but it was like 1/5 of the average trade size. So everyone's kind of like, look, it's the hot thing. It's a bit of fun, but I know it's a bit silly. You just cannot expect, the sequential wave of adopters to behave as degen as we're used to. As innovators are used to. So there's two markets. Really, I think the market has underpriced DeFi. I think DeFi is going to make a resurgence. We're going to move probably away from valueless gambling. It will still occur, absolutely.
Yep.
But it's that meme coin frenzy has really outperformed the hell out of DeFi, and I think now's probably time for DeFi to recover. And then there is just some basic plays for ETF flow, which is, XRP,
Solana, Litecoin, everything. Because I think they're going to just start blamming SE, like just you get an ETF, you get an ETF, everyone gets a. I think Hedera as well also has one lined up. I think it's like first is Litecoin, Hedera, Solana, and then whoever else applies after that. I'm sure Charles Hoskinson will be in with a Cardano request ASAP as well. Yeah, Jackson, thanks so much for coming on the show. Where can people stay up to date with what you're doing, and where can they find you?
Thanks for having me on. So, well, I'm on Twitter or X at im_Jackson Zeng. Also, you can find us at calebandbrown.com. We're trying to create personal brokerage as a segment for the crypto industry.
Fantastic, mate. Thanks again.
Thanks, mate.